In this presentation, we will record a transaction for owner withdrawals using bank feeds. In other words, we're going to see the money coming out of the bank with the use of the bank feeds, and we will allocate them properly with regards to the draws of money from the owner. Let's get ready because we're dropping in with Wave. Here we are on the Get Great Guitars dashboard. We're going to go on down to our reports on the left-hand side, opening up our favorite two reports, that being the balance sheet and the income statement. We'll start off with the balance sheet. As that opens up, or when that opens up, we're going to right-click on the tab up top and duplicate that tab. We're going to go on back to the prior tab now and do the same thing for the income statement. We're going to go back down to the reports down below, open up the income statement, the profit and loss, the P&L. So there it is. Once that opens up, we're going to right-click on the tab up top again, duplicating that tab. We're going to go back to the first tab, the one where we have the balance sheet on it, and then I'm going to change the date up top, and we're going to make that to the 2019 date. That's the year that we're working on. We're going to update that report. Then I'm going to go to the bottom. We're going to show the details of it, and there we have it. Now I'm going to go to the income statement and do the same thing. I'm going to change the date to 2019 because that's when we have the data for. And then I'm going to go down to the bottom and update that so that we can see the information, or show the summary of it so we can see the information for it. Now, what we have now is money that came out of the bank, and it's going to come out of the bank for a draw. So we don't really know where it's going to. This is another common type of situation. What happens if money's just drawn out of the checking account? Well, then there's a question that, well, if money got drawn out of the checking account, we know it's included here and we need to recategorize it. Does it need to be recategorized as an expense somewhere down here, like on the income statement? Or was it taken out by the owner and used for some personal use, in which case it should go on the balance sheet? We should recategorize it over here, somewhere in the equity section, as money coming out to the owner. Now, the general rule, what you would like to do, is set this up as anytime you take money out, then it's something that you're going to be using for the owner, and then put it over here. And anything that is going to be for the business, a business expense, then you're going to record it. You're going to make that expense with an electronic transfer, a credit card, or something like that, or a check, so that you have an audit trail. Why? Because these are kind of like deductions for taxes. You'd like to make these electronic transfers or something that you have an audit trail for, and not cash, because if you have cash, then you're gonna, and you spend it, then you got to get into the basically saving, do more of the saving of receipts and whatnot. And so what you would like to have is more of an audit trail, as much of an audit trail as possible, and cash has the least audit trail with regards to the expenditures. So that's what you would like to do. But if that's not the case, what if we took money out and then they spent money on cash? Let's pretend we're the bookkeeper and someone else, and we're asking the client that took money out, what did you do with this money? Did you spend it on the business, or is it for personal use? If they say it's for the business, then we got to recategorize it somewhere down here on the income statement. If we have no other category, it might go to something like miscellaneous or something like that. So I'm going to do that this time. We're going to take that money out and put it into miscellaneous, and then next month we'll put it into the draws, and you'll see the difference. If you put it into miscellaneous expense here, it's going to be an increase in the expense, which is basically typically an increase in like a tax deduction as well. Will decrease the net income, and the taxable net income possibly decrease the taxes. And if it's not correct, then if there's questions about that deduction, then you could have, you have to have justification for it in some way, and that's when you would want the receipts. Next month, we'll record it as a draw, and if it's a draw, then it should be over here, and it won't affect the income statement, and therefore it won't be an expense, and it won't be decreased in the income statement. All right. So let's go back to the first tab, and we're going to go back down to our accounting. Let's go to our transactions down here, and we're looking for the one that's going to be a draw. Now, here it is, $80 withdrawal. It might be called different things on your bank. It might be called a draw or withdraw, or money came out of the bank and there's no description for it, right? It's just cash came out of the bank. So we need to set this up to a category. And I'm going to say this time again, expense. We're going to say expense category this time. It's not for personal use. It was business use, but we don't know exactly what it was business use for. So we're going to put it into a miscellaneous or something like that. So we're going to go on down and say we need a miscellaneous expense or something like that. I don't see one. So I'm going to add another one down here. I'm going to add another account. I'm going to make it just a normal expense type, an operating expense. I'm going to call it miscellaneous, or IMSC, we'll just say, and there it is. So we're going to add that, and there we have it. So now it's going there, and we're going to check that off as having been applied out. That's the wrong one. I checked the wrong one off again. Good thing it doesn't let me do that. So I'm going to check this one off as having been done. Then I'm going to go back up to the balance sheet, and let's update this. We're going to go back up top and update this and see what has happened now. Now, note it's not down here in equity, so there's no change to the balance sheet. If we go to the income statement, it's going to come out of uncategorized, and after I hit refresh or update, we should see another expense category like pop out of nowhere down here. So we're going to say update for that miscellaneous expense that we set up. It should be down here now, and there it is. So now we have the miscellaneous expense, obviously increasing the expenses and decreasing the net profit. So that's it for now. Let's get out of here.